Good morning, ladies and gentlemen. This is Greg McCloskey. I'll take a look at the New York opening Forex commentary for FXStreet. The UK general election obviously hung Parliament, and the government leaders are trying to form a government with Cameron looking for the support from the Liberal Democrats, and Gordon Brown not giving up either. So all a mess there, causing Sterling to lose, become the focus, I guess, for a change, taking it from the euro dollar. And the market moved all the way down to a low of 144.74 before finding a bid and starting to move to the upside. As we look at the hourly chart, you can see here that the market move for this week has been to the downside. We were in this channel range. We broke out to the downside yesterday. The market tried to correct a little bit in the early market on hopes that the conservatives would have a majority, but then that all failed, and the market fell down to the low of 144.74. Since that time, the market has rebounded. 38.2% retracement comes in at 148.24, with trading at 146.78. Seems like a long way away. So let's go to the 5-minute chart and see if there's any clues from that 5-minute chart. And what we can see here is that the market is bumping against key resistance here. This is a 100-bar moving average in the 5-minute chart. Market screened below that level. Actually, if we put this Fibonacci coming over to this point right here, when the market initially went to the low for the day, the 38.2% retracement came in at 147.30. We moved just a little bit above that level, getting up to 44 level on a couple of squeezes here. You can see how the resistance against low from yesterday, low from earlier today as well in this area, so you can put a line in here, somewhere around there and say this is the resistance area for the sterling versus US dollar, and that's where exactly the market did find its resistance on the initial correction. Now let's move the Fibonacci to the new low for the day. And we can see that the 38.2% retracement comes in at 146.50. The 50% comes in at 147.05. So not only do we have the 100-bar moving average, we also have the 50% retracement in this area right here, and additional resistance up here, and then the resistance at 147.67. That's the top side. That's what the areas that we're going to looking for through the number is this whole area of resistance. I'd put a nice yellow bar across your chart somewhere around that level as the resistance area on the top side. On the downside, we break through this 146.43 level. That was the low here. Then we should see further pressure to the downside here toward the 145.96, and then maybe continue its move to the downside as the weekend approaches and as the market gets jittery. But who knows? Lots of going on today, and lots of different things tossing or pulling and pushing on all our currency pairs. So speaking of that, let's go to the euro. And the euro is getting hit a little bit here in the early New York trading. The market did rally really nicely on the back of the first Bank of Japan came in, added liquidity that gave it a boost, and then votes. And talks of G7 meetings and solving the bond market crisis. By the way, the Greek debt is still rising higher, as is Spanish debt yields, as far as I could see. So we came back to the top end of this channel. We broke through the channel here first of all, and then we came up to the top end of the channel. That top end of the channel currently comes in at around this 126.97 level. So that's going to be a key support level. If we move back into this channel here after the economic number, we should see the market start, continue to trade in this channel with a bearish bias. But we need to get through this level at 126.97 on the downside. Look for support through the number on a move toward that level. On the top side, we have 128.42. That's a 38.2% retracement of the move down from the highs that we saw this week to the lows this week, 128.42. So far, the correction hasn't gone to 128.42, so that's somewhat concerning. Also on support down below is a 100-bar moving average, and the 5-minute chart comes in at 127.19. So we're down there checking that out right now as we go into the number. But obviously, the number should probably push the market to the downside or the upside from here. So this is just a neutral level that will give the bias. Are we going lower or are we going higher? And I would think that a stronger number sends dollar higher, especially with the euro situation. So we should see the euro go down on a stronger number. They are expecting about 190,000 jobs. We'll be watching for the private sector numbers that come out with that number. The expectations for the employment rate are for the U.S. employment rate to stay unchanged at 9.7. So change in non-farm payroll 190,000, change in private payroll 100,000, change in manufacturing plus 20,000. Those are the numbers that we'd be looking for today. If the number comes out stronger, which I think the market may be thinking that way, we could see the dollar get stronger, in which case the euro goes down. So so that's how. So look for support again in the euro at this 127 level. If we get 126.97, if we get through that level, then back into this channel here that has contained the market for most of the week here, we should see further declines in the euro versus US dollar. That's what I would expect. 126.78 is going to be another support level. That's a 200 bar moving average on the 5-minute chart. The market has been below the 200 bar moving average for most of the week until the market broke above here, and then at this point where the market the two moving averages converged at the same time with the price, the market decided to squeeze further to the upside. So we'll be watching this 200 bar moving average on the downside as well. I hope you got all that. Dollar Canada had much better employment number statistics out here today, and the key level that we'll be watching for in that currency pair is 100-day moving average. That 100-day moving average comes in at the 103.32 level, and if you zoom in here, take a look at this chart. Oops. This is the 100-day moving average, and the low for the day came in at 103.33. So we did find the expected support at the 103 at the 100-day moving average, and that's exactly what we did. If the U.S. number comes out weaker, then we should see that that level be breached to the downside, as it looks like with the strongest job gains in Canada since 1978, that they may be looking toward tightening, perhaps at that June meeting that the market had thought they would look to tighten, but then became unsure about. Taking a look at the dollar Swiss, 111.84 is a 61.8% retracement of the move down from the 2009 high to the 2009 low. You can take a look at the hourly chart. You can see how that level has been important. It was a ceiling here, a ceiling here. We broke through it here, went to the high of 112.45, then came back down. Used it as a ceiling here, used it as a ceiling here today. So 111.84 is a key level on the top side. That's 100 pips away from that. On the downside, we do have support at 110.34. That's a 100-hour moving average. You can see that the market's been above that for most part going all this week. Here the market moved above that and came down. This is the closest it came down to testing it. We'll be watching 110.34. If the market breaks through that 110.34, we could head on down to the 61.8%, down to the 109.31 level. And finally, the dollar yen, the other major currency pair that we take a look at. I mentioned that the Bank of Japan came in and added 2 trillion yen into liquidity into the market, trying to calm the market's fears, and indeed the market did move above the 100-day moving average in the process. 91.47 is a key support level down. We're at 92.60, not really close to it. What you can see here, though, that we did have a correction. The market moved above that 91.47 level. The correction to the downside, where we come down to 91.47, also represents 50% retracement of the week's move down from the high to the low. So key support at 91.45, 91.45 to 47 for the dollar versus yen. If the market goes higher, look for 93.12 on the top side to provide resistance, and then 93.85 where the 100 and 200-hour moving average come in. So that's our economic numbers. Again, U.S. unemployment comes in at 8.30. Canada unemployment much stronger than expected. Euro, UK elections, meetings in Eurozone, G7 telephone conferences, IMF meetings, stock market, Goldman Sachs. It's all out in front of us. Very volatile. Increases the risk in your trade, and make sure you adjust your risk parameters appropriately. We'll talk to you all later. This is Greg McCloskey for FX Street from FXDD. Bye-bye. Have a great day.